Hello, welcome to my channel today. This is a King's Tutor. Okay. Um, if you're joining us for the first time, please ensure you like, comment, share, and subscribe to our channel. Today, we want to see likely questions. Now, one of the things I will tell you as we progress is please ensure you watch to the end. Don't skip any part. Okay, because this is a life-changing aspect for you to ensure you do well in these exams. Okay, so we want to see likely question that I'm sure proven step that would come out if you look at it. Okay, in this channel we have done majority of the topics, so just go through it to see and help yourself. Now, one of the topics that is likely to come out is control account. We have treated control account introduction and we'll solve some example. I'll drop it up there. So I'm going to see different topics that they did not set last year and also last 2 years that I think it will be coming out this year. Okay. So ensure you look at those topics sequentially, and also the solution for last year Neco and last 2 years. We are going to also see the solution right now. Okay, so that is why I said ensure you look. If you follow what I'm about to do now, I bet you will not fail in the exam. So ensure you just comment below where you're watching it from, the school and the state. Okay, and if you're preparing for the exams or not, ensure you comment below. Now, I want to see this question. Like I said before, control accounts is one of the topic to watch out for. Very important. Okay, so this is one of the past questions for Neco, so that they set control account. Let's see how to solve it. Like I said, done a video on that. Ensure you watch that. Okay, now the question said the following balances were extracted from the books of Ayer Suleiman, a sole trader. Opening balances: sales ledger debits 44,400, sales ledger credits 260, purchase ledger debits 300, purchase ledger credits 36,000. Now they say closing balances on the 31st December 01. Purchases 184,700, sales 221,600, cash from debtors 206,644, return inwards, cash paid to supplier 172,700, return inwards 25, return outwards 4,260, discount received 3,000, discount allowed 2,400, bad debt 400, credit balance in credit ledger transferred to debtors ledger 20, debit balance on debtors ledger 270, and credit balance on creditors ledger 120. Now they said you are required to prepare the first one, sales ledger control account; second one, purchase ledger control account. Like I said, we have done control account. Watch the video for the format. Okay, watch the video. I'm going to leave it in the description, so ensure you watch it for the format. Now, to solve this, when if control account comes in, this is how you have to do it. Ensure you prepare the sales ledger and the purchase ledger simultaneously. Okay, so that as the event come, you record it so that you don't miss any item. Okay, so we are gonna do it now. Okay, now the first one said opening balance sales ledger debit. So in some question, they will give it like this for you to, they will specify where to post it. But I said in the introduction video that if it is silent, they just said opening balance sales ledger and purchase ledger. If it is silent, sales ledger is supposed to be debited and purchase ledger have a credit balance if they are silent. But once they specify like this, you have to do as they have said. Okay, so this is sales ledger debit. So we're gonna write here in the sales ledger. After you've written this, now you have balance brought forward 44,400. Okay, then sales ledger credit, you write here balance brought forward 260. Okay, the next one, purchase ledger debit 300. So we have purchase ledger debit, so it is balance brought forward 300. And also purchase ledger credit 36,600. Balance brought forward 36,600. Okay, so now we advance further. They say the closing balance, the purchases 184,700. So it will affect purchases. Now we gave rules. Say for sales ledger, what you post at the debit side is what will decrease the debt of the debtor, or to increase the debt of the debtor. The debit side, you post what will increase the debt of the debtor. While at the credit side, you post what will reduce the debt of the debtor. Okay? While also the purchases ledger debit side, you post what they receive, and the credit side, you post what they give out. Okay? So now we have here purchases. It means it is going out, so our purchases is always here as credit purchases most time. $184,700. So we have $184,700. Okay, the next one is sales, $221,600. So our sales is always here to increase the debt of the debtor. Credit sales 221,600. Okay, the next one, they said cash from debtors. 200,644. So if they receive cash from debtor, it means debtors paid it to reduce their debt. So it will be on the credit side. Cash from debtors. 200,644. 200,644. Okay. The next one said cash paid to supplier, 172,700. Now if they pay to supplier, it means supplier will have to receive it. Okay, so it means it will be debited here. Cash paid to supplier, and it is how much? 172,700. 172,700. The next one, return inwards, 25. Now return inwards are goods returned by the customer. So if they return it, it means it will reduce the amount they already owe. So it will be on the credit side. Return inwards is 25. Okay, so right here, return inwards as 225. The next one, return outwards, 4,260. Now return outward is the one that will affect the supplier. Okay, so they are giving to them, so it will be debited. Return outward, how much? 4,260. So have your return outwards, 4,260. Okay. Then also the next one, discount receive, 3,000. Now discount receive is to the supplier, and they're receiving it, so it will be here. Discount received. How much is it? 3,000. So that's 3,000. The next one, discount allowed, 2,400. So discount allowed is a reduction given by the seller, so it will reduce the amount that the debtor is owing. So it will be on the credit side. Discount allowed. Okay, so we have discount allowed, 2,400. 2,400. The next one, bad debt, 400. A bad debt is irrecoverable debt. Okay, it will reduce the amount owed by debtors. So it will be on the credit side here. Bad debt. How much is it? 400. The next one, credit balance in credit ledger transferred to debtors ledger. Now this is a set off. Okay. Now in set off, we say it affects the two account, and that of the sales ledger is credited. So it is 20 and debited by the purchases ledger with the same amount. We'll call it set off or contra entry. The next one, interest charged on account, 1,920. So interest and charge on account is affecting the debtors to increase the amount they owe. Interest charged. How much is it? It is 1,920. So 1,920. The next one, debit balance on debtors ledger 270. Now, when it comes to the ending balance and they are giving us, you don't post to where it is stipulated directly. You post to the opposite first when it is closing balance. Then the corresponding entry will now reflect what was said. Like what I'm saying now is debit balance on debtors ledger. Since they say debit balance 270, you don't post it here. You come here, you post it first on the credit side, doing the opposite first. Balance carried on. How much is it? 270. Okay. So the next one, credit balance on creditors ledger 120. So creditors ledger, which is the same thing as purchase ledger. They say credit balance. You don't post to the credit side first. You post to the debit first, since it's the ending. So balance carried down. How much is it? 120. Okay. So we have 120. So we're going to add this to know the value of what we're supposed to have. Okay. So if we do that, the debit side here, this will be 44,400 plus 221,600 plus 1,920. This will give us 267,920 for debit. Okay. So now let's check credit. We have 260 plus 200, 644 plus 25 plus 24 plus 400 plus 20 plus 270. That's 206,494. That is 206,494. So I have 206,494. So it means this is debit and this is credit of sales ledger. So it means the debit side is greater than the credit side. So we're going to have a balance carried down. Okay. So we're going to have a balance carried down to reflect the difference. So this is 267,920 minus 206,494. So we'll have balance carried down of 61,426. So that when we add everything, it will give us 267,920. Okay. So now the corresponding entry will now be the balance brought down 270 first. Now this is now reflecting what was said here, debit balance on debtors ledger, and the actual one also, balance brought down 61,426. Okay, so that's the first. And also, let's see the purchase ledger. Let's add it up also. So if we add up, we'll have the debit side here, 300 plus 172 700 plus 4,260 plus 3,000 plus 20 plus 120. So the debit side is giving us 180,400. Okay, so now we'll have the credit side 36,600 plus 184,700. And the credit side is giving us 221,300. So it means the credit side is greater than the debit side. So I'm gonna get the balance. So if we get the balance, so this credit side said is 221,300, which is bigger than this. So to get the balance, 221,300 minus 180,400 is 40,900. So we have a balance carried down 40,900. So when we add everything together, it gives us 221,300. Okay, so the corresponding entry would now be balance brought down 120 and balance brought down 40,900. Okay, so that is how to do the control account. Now let's see other ones also. Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us, ensure you like, comment, share, and subscribe to my channel. Okay, now today we want to see a question on income and expenditure accounts that involves bar trading. We have done several videos on this before. If it's the first time, please ensure you click up here, you will see it, or you check in my description. We have done from the introduction and various video. Please watch that before this so that you can have a grasp knowledge on this. Okay, so the question said the receipt and payment account for Friendship Social Club for the year ended 31st December 2007 showed the following. And we have the receipt and payment account for 31st December 2007. On the debit side, we have balance brought forward 5,000, bar sales 3,250, subscription 6,000, live membership 1,250, donations 35. We have on the credit side bar stocks 17, electricity 280, repairs to equipment 400, donations to charity 2,250, maintenance of grounds 600, buy expenses 350, rent 300, balance carry forward 11,920, all sum up to 19,000. Now additional information, we have two dates, 1st January 2007 and 31st December 2007. We have subscription paid in advance 250 and 500, subscription in arrears 600 and 750. Now we have bar stock 400 and 450, and it said rent, prepaid, and electricity accrued at 31st December 2007 were 60 lei and 80 lei respectively. You are required to prepare A. Subscriptions account, B. Bar trading account, C. Income and expenditure account for the year ended 31st December 2007. Okay, and as you can see, this question is 15 marks. Very simple. So whenever you're given a question like this, what do you do? Where do you start from? Now, one thing you should first of all check is what you're required to do. They say required prepare the subscription account, the bar trading, and the income and expenditure. Now let's check out the additional information. Let's prepare the subscription account. Okay, and the first thing we have to do, let's write the name of the owners. It said it's Friendship Social Club. So we'll have Friendship Social Club. Okay, so Now from this now, they said we should prepare the subscription account. So we're going to prepare the subscription account. That's the first one. Subscriptions account. Okay. So from this now, if we check here, from the subscription account, if you check here, you will notice you have two dates. Now we have treated how to prepare subscription account, only that. I'll drop it up here or in my description so you watch how to prepare only subscription account where we solve various situations. Please watch that. Now in this now, if you notice, we have two dates, 1st and 31st. Now subscription is the monthly payment made by members of a club. Now we are using the subscription. The essence of using it will be doing the income and expenditure, and it is prepared at 31st, which is 31st. So these two dates now we have in advance and in arrears. Now subscription is an income to the income and expenditure account. That's the club. It's an income. Now they said subscription paid in advance and in arrears. In advance means the members paid before a specified time when it's supposed to be counted for, while in arrears means they are owing at a particular time. Now for the end of the year, which is supposed to be used, if it is in advance, it is supposed to be less, while in arrears is supposed to be added. We have done accruals and in advance. Okay, if you need that video, just comment below that you need a video on adjustment of this and I will show you. So they said if it's advanced for the end of the year, it is supposed to be less. If it's arrears, it's supposed to be added. Now if it is a date that is before that end of the year, you will do reverse of what you're supposed to do here. So since we are lessing for in advance for the end of the year, for beginning of the year we'll add. For in arrears now, since we are adding for beginning of the year, we'll less. Okay, so our subscription and this beginning is the balance brought forward that is coming to the new year. So subscription in advance, since we are lessing at the end, it means we'll add. So it will not be balance brought forward. This one here, 250. Okay, the next one, subscription in arrears, this is supposed to be less. Balance brought forward 600. Okay, now if you check here, you'll notice we have subscription here. Okay, the corresponding entry will come here. Now it was debited there, it means it was received, so the corresponding entry will not be cash. 6,000. Okay, 6,000. Now I have to now record this. I will say for this in advance or less, and lessen is to deduct it from this the main amount. So we'll have a balance carried down here, 500. I'll also have balance carried down as in the latest balance, 750. Okay, so now our balancing figure will be the amount that will go to income and expenditure account. That's the essence of preparing this. Okay, so we now have to add up here. So we'll add up here 6,000 plus this 750 plus 250 will give us 7,000. And this is 600 plus 500 will give us 1,1. So 7,000 minus 1,1 will give us 5,900. So that when you add it together, it gives us 7,000. So this is a balancing figure. So income and expenditure account. So this is the amounts that will go to income and expenditure account. while we're preparing it. Okay, so that's for subscription account. And the next one is B, to prepare bar trading. But before we prepare bar trading, let's prepare an adjustment. Look at here, they said rent prepaid and electricity accrued. So let's prepare adjustment for rent and electricity. So we'll prepare rent account, that is for adjustment. Adjustment, we'll prepare rent account. Now they say rent prepaid. Prepaid means payment in advance. Okay, so we have rent here if you notice. So the corresponding entry will come here to be cash. It is credit here. Okay, this receipt and payment account is credit here. So the corresponding entry will come to the rent account at the debit side, cash 300. Now they said prepaid means they paid in advance, and according to what was said, prepaid we have to rent prepaid, okay, at 31st. So prepaid we have to less, okay, so we have to less. So rent prepaid have to be less. So we'll have it here opposite of the normal cash, okay, as what 60 naira. So we'll have a balance carried down 60. So the balancing figure will now be the income and expenditure. Is what we'll go to the income and expenditure. So this is 300. This will give us 240. So that this is 300. Okay, so that's for rent account. Okay, remember this is prepaid. They said prepaid means they paid in advance, so we are lessening it from this amount and it's coming what opposite this. Okay, so the balancing figure, it means this is what is going to the income and expenditure account. So that's for rent. They also show electricity is accrued, so we'll have here electricity account. Okay, so in this now, for electricity, if you check here also, it was credited in the receipt and payment account. The corresponding entry will now come here as also cash, the debit 280. Okay, now they said accrued, it means it's supposed to be added. Okay, so added, it will be the same side here as balance carried down 80. Okay, so that we'll have filter here of 360. So our income and expenditure will now be 360. So that when we add together, this is 360. Okay, so that's the adjustment we have to make. So that is for rent and electricity. Now let's prepare the bar trading now. So we'll now prepare the bar trading account. Here's the second one, B, the bar trading account. Okay, so the bar trading account. So the bar trading account will comprise of the opening stock. Now if you check here, you have bar stock first and 31st. It means this is opening stock and this is closing stock. So we'll have it here as opening stock as 400. Now how do we get purchases? add purchases. Well, what will now be our purchases? If you check at the credit side here, is bar stock. It means they bought extra stock. So that amount of stock they bought is what purchases they added. So our purchases is 17. So this will give us 2,100. Okay. Now we now have less closing stock. And the closing stock is the one at the end, that's 450. So 21 minus 450 will give us 1,650. So if you check here, you see sales. That's bar sales. So we have the bar sales, which is 3,250. Okay. So now this is the cost of goods that is sold. So the bar sales minus cost of goods sold will give us the bar gross profit. Bar gross profit. So this 3,250 minus 1,650 will give us 1,600. Okay, so that when we add together, it now gives us 3,250. So this will also give us 3,250. Okay, so that is that. Now the next one is, this will not be brought down here. This is carried down. This is not brought down here as the gross profit. Brought down 1,600. So we have to get our expenses. And we're going to check an expenses that is for bar, not the general expenditure, but the one that relates to bar. So look at it here, the bar expenses. So we have here bar expenses 350. That's 350. Okay, so from this now, there is no other expenses. So to get our net profit, it is the gross profit minus the bar expenses. So we now have the net profit, that's the bar net profit, 16 minus 350. So we have 1,600 minus 350, that is 1,250. So that when we add together, this will give us 16, and this is 1,600. Okay, so with that, we have prepared the bar trading account. Now the next one, C, is the income and expenditure account. The income and expenditure account. So we have C, the income and expenditure account. Okay. So now in the income and expenditure account, we said we debit all expenditure and credit all income. Okay, all income is supposed to be what credited, while all expenditure is what debited. Remember, we have done a video on this before. Please check in the description on my playlist to see the introduction video so that you understand that better. Okay, so now the actions will prepare the income and expenditure. So we'll prepare it from the receipt and payment account. Remember, everything here are what was received and what is here are the payment. Now note, in the introduction video I said it is not everything that is paid that's an expenditure. Okay, so we have to identify the expenditure and also identify the income that arises from here, and to recognize that there are some items that I've done adjustment on. Okay, so from this now, we are going to check that all expenditure will be debited here. So, and it will be from here. Now let's check bar stock. Bar stock, this purchases is not an expenditure. Okay, we'll leave that. The next one, electricity, 280. But remember that we've done adjustment on electricity. You see, that is the essence of doing the adjustment. So look at it, income and expenditure 360. It is credit here, so the corresponding entry comes to the debit of income and expenditure. So we'll now have electricity as 360. Okay, the next one Repairs to equipment. The repair equipment, that's 400. So it's an expenditure. So now we'll just write repairs to equipment 400. Okay. The next one, donation to charity. So we have donations to charity. That is 2,250. Okay, the next one, maintenance of grounds. Maintenance of grounds, 600. The next one, buy expenses. It has been taken care of here. The next one is rent. Rent. Remember that we did adjustment on rent. Okay, so we did adjustment on rent, which is this. So it is 240. So we have rent 240. Okay, now that is all for the expenditure. Now the income. Bar sales, we have taken cognizance of it here, so it will not come here again. So remember our net profit, we'll bring our net profit as an income. So we have a bar net profit as 1,250. Okay, the next one is subscription. We did adjustment on subscriptions. We did adjustment. So look at it here, 5,900. So it is what will come here, 5,900. Okay. The next one is live membership, 1,250. So I have live membership, 1,250. The next one is donation, 3,500. So donations is 3,500. So that is all. So let's now know if there is surplus or deficit. Now, there is surplus if the income is more than the expenditure, you have surplus. And there's deficit if the expenditure is more than the what? Income. So we're going to calculate the income. So let's add up the income. So we have 1,250 plus 5,900 plus 1,250 plus 3,500. So that is 11,900. Okay, now let's also calculate the expenditure. We have 360 plus 400 plus 2,250 plus 600 plus 240. That's 3,850. So the expenditure is lesser. So let's get the difference. So the difference is what will give us what we call surplus. So 11,900 minus 3,850 will give us 8,050. So that when you add everything, this is 11,900. So this becomes the surplus, 8,050. So this is how to prepare this account. This is the subscription account, the bar trading, and the income and expenditure account. Okay, so we have done various video, introduction video on this. Please ensure you watch that. Okay, watch that. Thank you very much. Please ensure you like this video. Please like this video and share. Subscribe to our channel. Okay, thank you very much. Hello, welcome to my channel today. This is a King Tutor. It's the first time of joining us. Thank you for clicking to this. Ensure you like, comment, share, and subscribe. Okay, now before you move to what we have today, please just drop in the comment section where you're watching me from, your institution, or if you're not yet in a high institution, your secondary school, your senior high school. Okay, and what course of study you would like to study, and also if you're studying a particular course, just drop it there. Okay, now this is a past question for Neco 2021. The question they said the previous year. Okay, we want to find a solution to it. Now the question involves the cash book. We have seen the cash book before. Okay, if you have not seen the video, don't worry. I'll drop it in the description. I'll drop it up here so you watch that, have a background understanding before we proceed. Okay, so this question is on Neco, like I said, 2021 past question, and it's on the 7. It's number 7 question, and it says Bola Alabi Enterprises started the business with 5,000 naira cash as his capital on 11th of January 2017. On 11th January 2017, he purchased 15 bags of rice at 300 naira each. 12th January 2017, sold 10 bags for 315 naira each. On 15th January 2017, bought 12 bags at 315 naira each. 17th January 2017, sold 10 bags in cash for 4,000 naira each. 19th January 2017, paid 1,000 naira in cash as transport. 21st January 2017, sold 6 bags at 350 naira each in cash. 23rd January 2017, sold the remaining 7 bags in cash, 2,800 naira. 25th January 2017, paid 500 naira in cash as delivery charges of rice to customers. On 28th January 2017, paid 1,500 naira on rent. You are required to record this transaction in the appropriate cash book of Bola Alabi Enterprises. Okay, so like I said before, this is on cash book. We have done introduction video on cash book. Check it, I'll drop it up here or in my description, and also on single column cash book. We have solved a question on that. Please ensure you watch that. Okay, now we want to solve this. Now they said Bola Alabi Enterprise started the business with 5,000 naira cash as its capital. So they said we should record this in the appropriate cash book. And the appropriate cash book to record this is the single column cash book. So we're going to write the name of the owner as Bola Alabi. Okay, so I have the cash book. The cash book. So we have a date, the particulars, I have a folio and cash. This is the center. We have date, we have particulars, we have folio, and we have cash. Okay, so we have date here, we have particulars, we have folio and cash. We have date, we have particulars, we have folio and what? Cash. Now, if you notice, this question is 15 marks. Very simple. Okay, though they asked us to prepare only cash book, but we are going to prepare for this video. I'm going to add preparation of the ledger so that you see how to prepare ledger sheet in case you are asked in this exam you're preparing for. Okay, either WAEC or this. In case you are asked to prepare to post to the appropriate ledger after completing that of the cash book. So we are going to start. The first one said, started business with 5,000 naira cash as its capital on 11th January 2017. So our capital is on 11th. Remember, we said the capital is the money used in starting up a business. So this is 2017, January 11. Okay, on January 11, it started business with capital 5,000. Okay, 5,000. Now we'll come and prepare a capital ledger. Capital. So debit entry here, the corresponding entry comes credit here. January 11, cash of 5,000. So with that, you have completed the double entry principle. Okay, so the next one, on the 12th of January 2017, sold 10, on 11th January 2017, he purchased 15 bags of rice at 300 naira each. 15 bags of rice at 300 naira each. So it means he made purchases, he bought. So anytime a retailer is buying, his cash goes out our interest is to know how the cash is flowing. How is it going? Is it coming in or going out? So it goes out. So it becomes on the 11th, 2017, on January 11th also, purchases is 15 bags of rice at 300 naira each. So it is now 300 times 15. It will give us 4,545. So now that is for purchases. So we now have to create our purchases. So I have purchases. So it is credit here, the corresponding entry comes as debit here. So it becomes on the January 11th, cash 4,5. Okay, with that you complete the process. The next one, it said on the 12th January 2017, sold 10 bags for 350 naira each in cash. On the 12th of January, he sold that bags of rice. So whenever he sells, the goods goes out, but the cash is coming in. So if the cash is coming in, it should be what? Debited. So right here on January 12th, sales. That is what will be in the particular. How much is the sales? They say they sold 10 bags for 350 naira each. So we are going to multiply 350 times 10. That is 3,500. 3,500. So once you've recorded that, now corresponding entry will have to go to sales, the sales account. So in the sales account, since it is debit here, corresponding entry becomes credit here. So it is on January 12th, cash sales of what? 3,500. Remember I said I'm the one adding the ledger so that you see how you can what prepare. But in the question, in the exam, they said only the what cash book. Okay. So the next one said on 17th, 15th of January 2017, bought 12 bags at 350 each. Another purchases, so it is on the 15th. Another purchases, which is 12 bags at 350 each. So it is 350 times 12. So that is 4,200. Okay, so the corresponding entry comes here on the 12th also. Another purchases in cash, 4,200. So that's how you record. The next one, you have 17th January 2017, sold 10 bags in cash for 4,000. They didn't say each, they just tell you the amount. Sold 10 bags in cash for 4,000. So we have on the January here, which is 17. So we have another sales, 4,000. They didn't say in cash, they just told us the amount. Okay, so since another sales, so the corresponding entry will also come here, 17 cash, and the amount is 4,000. Okay, the next one, I said on the 19th January 2017, paid 1,000 naira in cash as transport. So he paid transport. She paid transport while was going to what get the goods. So the money is going out. So we'll have to credit it on the 19th transport. On the 19th transport, how much was paid? 1,000. Okay, so 1,000. So we have to open a transport ledger. So we have transport. It is credit here, so the corresponding entry comes here as debit. On the January 19th, we have cash 1,000. Okay. The next one we have on the 21st of January 2017, sold 6 bags at 350 naira each in cash. Sold 6 bags at 350 naira each in cash. Sales, another sales. So it is on the 21st. Okay. Another sales at 350 naira each. So we multiply 6 times 350. It will give us 2,100. Okay, we're multiplying it. So the corresponding entry comes here, which is on the 21. Another cash, 2,100. Okay, the next one is on the 23rd. Sold the remaining 7 bags in cash, 2,800. They sold the remaining the remaining 7 bags in cash. They didn't say each, they just told us the amount, 2,800. So another sales on the 23rd. They made sales. How much is it? 2,800. Okay, so corresponding entry comes here now on 23rd. Another cash of 2,800. Okay, so the next one on the 25th, paid 500 naira in cash as delivery charges of rice to customer. Paid 500 naira in cash as delivery charges of rice to customer. So she delivered rice to the customer, so I have to pay delivery charges. Once she's paying the delivery charges, the money is going out. Okay, so it should be credited. So on the 25th, so right there, delivery charges of 500. Okay, so open a delivery charges account. Delivery charges account. So it's credited here. The corresponding entry comes here as January 25 cash 500. Okay, the next one, it said on the 28th of January 2017, paid 1,500 on rent. So paid rent, money is going out. So it is on the what? 28th. Rent of how much? 1,500. So also open a rent account. So it is credit here, corresponding entry comes here, January 28th, cash 1,500. Okay, so that is all for that. So we have to now balance the accounts appropriately. So we're going to add up the debit and the credit side and compare which is bigger than which. Okay, so that we can have our balance carried down. So let's start with the debit side. So it will start with the debit side. So if we add up 5,000 plus 3,500 plus 4,000 plus 2,100 plus 2,800 to give us 17,400. Okay, so in that now, let's add up this also. We have 4,500 plus 4,200 plus 1,000 plus 500 plus 1,500. So we have 11,700. Means here is bigger than this. Okay, so what we're gonna do now is to get the balance. So 17,400 minus 11,700. So we have 17,400 minus 11,700. We have 5,700. So we have on the 31st, we have a balance carried down 5,700. So when you add everything, it will give you the same total, which is 17,400. So that's with that. So the new month, which is February 1st, this balance will now be brought down here as balance brought down 5,700. So this is the cash in hand, 5,700. So let's close other account. So we have just this in here. So just have balance carried down 5,000. If you close this, you have closed this. Move to the next. We also have a balance carried down. So we have 8,700. So we have 8,700 here. So 8,700. Okay. The next one is sales. So we have here sales 3,500 plus 4,000 plus 2,100 plus 2,800. We have 12,400. So now have a balance carried on 12,400. Okay, 12,400. So the next one we have balance carried on here 1,000. We have delivery charges here, balance carried on 500. The next one, rent account, we have balance carried on 1,500. So with that, we have balanced the account. Okay, so that's the solution to that past question. In that same question, November Neco 2021, we have done diverse of the questions. All the questions we have solved it. Ensure you check in this channel the ones you want. Thank you very much. And please, if you have not subscribed, please drop the click on the red subscribe button and on your notification bell so you know when we drop more videos like this. And also comment below the part you don't understand and the one you want us to show. Thank you very much. The final accounts of a sole trader. Okay, so a sole trader is also known as the sole proprietor. Okay, that's a business that is owned by an individual. Okay, so now the final account of the sole trader comprises of, first one is the trading account. Second one is the profit or loss account. While the third one is what we call the balance sheet. Okay? So the trading account, the profit or loss account, and what? The balance sheet. Now we're going to see them one after the other in isolation. Now the first one, which is a trading account, or recently the name has changed. That's merging the trading and the profit or loss account. It is formally called an income statement or the statement of comprehensive income. Okay, so in case you're seeing that in your exams, you should also know it means the same thing. Okay, and the first one, which is the trading account. The trading account. And the trading account is prepared to get the gross profit or the gross loss. That is the essence of preparing trading account. To get what we call what? The gross profit or what? The gross loss. Okay? So what and how can they get the gross profit or gross loss? Now the gross profit can be gotten by deducting the cost of goods sold from the sales. So it is sales minus cost of goods sold. Okay, so the essence of preparing trading accounts is to what? Get our gross profit or what? Gross loss. Okay, now when the sales is more than the cost of goods sold, it is gross profit. But when it is gross loss, it means the what? The cost exceeds the what? The sales. Okay, so in the trading account, the trader want to see is gross profit, okay, or the gross loss, and it is gotten by deducting the cost of goods sold. Now, it is not the cost of all the goods; it is only the cost of goods as what's sold. Because as business men, they can have some goods in the storehouse that is not what's sold for that particular year. Okay, so the gross profit is one of get the sales and the cost of incurring expenses in trying to make these sales. That is what cost of goods was sold, and it has a format. It has a format that we can follow suit. Okay, now let's see the format. Now we can see it as format of the trading account. The format of the trading account looks stocks. Now the credit side, we can have our sales. Okay, so now at this side, now what normally starts our trading account is opening stock. So I'll have to explain all this one after the other. So I have opening stock. Another is the add purchases. Another is the add carriage inwards. Another is less return outward. Another is less goods withdrawn for own use. Now, whatever you have here will not be what we call cost of goods available for sale. The cost of goods that is available for sale. Now, when you now less closing stock, you have what you have here now is what we now call cost of goods sold. Okay? Now, this is what we're talking about, the cost of goods sold and the sales. Now, at the right hand side, what we can deduct from the sales is what we call less return inwards. I will explain the meaning of all these terms one after the other. So I have less return inwards. So this can give us what we call net sales. So we look for the difference between this and the cost of goods sold. If this part is greater than this, we'll have our gross profit at this point, so that it can balance automatically. So this also should have the same value as this. But if the cost of goods sold is greater than this, what we'll have here is what we call gross loss, so that it can balance also automatically. Okay, now all this item, now starting from the first one, opening stock. What does opening stock means? Now the opening stock is the stock that is available in a warehouse or in the store at the beginning of the year. Okay, probably at 1st January of a particular year, the stock in the warehouse is called the opening stock. That's the stock they use in opening the year. Okay, for that business. So we said it's normally added to the purchases. Now, what is purchases? Goods bought for resale. Okay, because once you start up a business for a particular year, probably a new year, and you bring out your goods for that was from the previous year. So definitely that goods will not be enough to run out for that particular year. So you have to go to the market to restock, to buy more. So that going to the market to buy more is what we call purchases. It's called goods bought for what? Resale. Okay? So once you add it to this, now this is carriage inward. Now what does carriage inward mean? Now it means that the expenses or the cost you incurred in getting those goods you purchase in the market, those are the costs incurred in getting those goods towards your store. For instance, probably you went to the market to get some goods and you couldn't, it is so much, you can't take it on your head to get to your store. Definitely you have to call a taxi or get a lorry or something to get those goods towards the store. So that cost you have to pay either the bike man or the taxi man or the cab man to take those goods towards the store. It is what we call the carriage inwards. Okay, it is carriage inwards going to your store. Now, another one is let's return outward. Now, what is return outward? Now, probably you've gone to your store and you notice that there are some goods that are damaged or they are not in the right order that you purchased them. You did not see them while you were buying them. So you found that in your store. You have to take it back to the supplier, those you bought it from. So it is called return outward. You are returning it out from your store. Okay, so it's called return outward. So that is why we have to less it. Okay, since we are not making use of it, we have to less it so that we know the actual item that is in the store. So another one is less goods withdrawn for own use. Most time, probably you purchase let me use clothing for instance. You went to the market, you did in clothing, you purchase a particular type of cloth or a jean, and you like that particular jean. You want to use it for yourself. Okay, most time it happens. So when it happens, you less it. That is less goods withdrawn for own use. Okay, so less that. So what we have here is what we call the cost of goods available. Now this is what is now available to sell. Okay, so you less closing stock from it. Now what is closing stock? Remember we have opening stock here. Now what is closing stock? Now closing stock is what? The stock remaining at the end of the year. Probably at 31st December, that stock remaining in the store is called closing stock. Okay, so you less closing stock from cost of goods available. So what will be remaining is cost of goods sold. The cost of goods will actually sold to the consumers. Okay, so and here we have our sales. You know sales now. Sales are items that are sold. Okay, to the customers. Okay, so the sales. Now the less return inwards, you are lessing from it. The return inward, you are lessing from it. Now return inwards are items that are returned back to you from the customer. For instance, I would say sales. Those items you sold. Okay, you sold to a customer, and probably they got to the house. The item you sold to them has been damaged. They have to return it back to you. That is inwards. So we have to lessen. The same way you found out that there are some item that was bad and you return it back to the supplier. That is the same way some customer that bought from you, they might find out that some item you sold to them were bad. They can return it back to you. So it is called return inwards. Okay. Another name for return inwards can also be sales return. So in case you see that in your exams, it's also known as sales return. While another name for return outward is purchases returns. Okay, so just know these two names. Okay, so what we have is what we call the net sales. So this amount here minus the cost of goods sold, whichever is greater. If what we have here is greater than this, it means to ensure that we have the same balance, because in accounting we should have the same balance. So if what we have here, the net sales, is greater than the cost of goods sold, it means to balance it all, we have to get the difference. So the difference is now what we call gross profit. Okay, so that we balance it up, it has the same word balance. But if the cost of goods sold is greater than the net sales, it means that this will be our totals. Then to balance it up now, this should not be what? Gross loss. Okay, so that is how the format for the trading account looks. Okay, so that is how it looks. So you can take a look at it, how it looks. So let's prepare the profit or loss account. Let's see also how it looks like. Okay. Okay, let's see the second one. Okay. Now we have seen the first one on the final account, which is what the trading account. Now let's see the profit or loss account. Okay. Now the profit or loss account account is prepared to get our net profit or net loss. Okay, you say it's prepared to get what? Net profit or what? Net loss. You're prepared to get net profit or what? Net loss. Okay, now how do we get this net profit? Now the net profit is gotten by gross profit plus other income minus expenses. That is the gross profit that was carried down in the trading account. You bring it to the profit or loss account at the right hand side, credit side, then plus other income minus expenses. Now let's see the format. Now also, though most time it is added together to the trading account. Okay. Now, for instance, if we have this, so we have this as our profit or loss account. Profit or loss account. It means we have gross profit brought down. Other income can be discount received. Okay, we can have bad debt recovered. Okay, we can have reduction in provision for bad debt. Reduction in provision for bad debt. Okay, and we can also have profits on sale of assets. Okay, so these are some of the profits. Now, the expenses also might be, we have salaries, we have telephone charges, we have discount allowed, we have bad debt, we have increase in provision for bad debt, we have general expenses, we have postage, we have various type of expenses. Okay, depending. So the problem or the idea is to identify, to be able to identify what is expenses in this regard. Okay, so we have many types there. Also have advertising, we have transportation and all that. Okay, so now look up. Now, if the income, this is the income side, and this is the expenses side. If the income is greater than this, we'll have a balance here to balance it up as what we call net profit. But if the expenses is greater than this, we'll have what we call net loss to balance it up. Okay? So it's always assumed that this part is greater, but not in all cases, because making a profit in a business is not certain. You might run at a loss. So if the income side is greater than the expenses, we'll have a balancing figure called the net profit, so that they can balance automatically together. Okay, so that is the second one, the profit or loss. Okay, Now let's see the balance sheet. Let's see the balance sheet. Now the balance sheet is known as statement of financial position. It is prepared to show the balance in the what? In the financial what? Statement. The balance sheet is not an account. It's a statement showing the asset, liabilities, and capital in a well-arranged form. Okay, so balance sheet can be shown as this. So balance sheet as at 31st December 20XX, depending on the year. So it's normally written as at. Okay, so we'll have this. Now the debit side, on the left hand side, we don't have debit side. Left hand side, we have financed by, I have capital here. The capital, that's the money is starting up the business. Now, another thing that will come here is add net profit. The net profit that was gotten from here, if there was. So, now say less drawings. Okay. Now we have what we call long-term liabilities. And long-term liability are those amounts owned by that firm that can last for more than 1 year. That's why it's called long-term. And one of it is the venture. Okay. Now we can also have current liability. And the current liability is what the firm owe to outsider that is within an accounting period, within an accounting year, within 1 year. So some of the items there are creditors. Creditors, we also have accrued expenses. Now what is accrued expenses? Accrued expenses, you will see that more in the adjustment if you have watched the video on adjustment. Accrued expenses are those expenses for which we have enjoyed the services but our money has not been paid. For instance, rent. If you're living in your hostel, for instance, in your hostel and you have lived from last year up to this year and you have not paid for that last year, it is what an accrued expenses. It's an expense to you and it's accrued. It means owing. Okay, it means you have not paid. You are still owing that expenses. So that is called, it is what, a current liability. Okay, so that is that. We can also have prepaid income. Prepaid income is also a current liability. Okay, you can also have overdraft, bank overdraft. Prepaid income is when you receive income in advance of rendering your services. Okay, when you receive income in advance. For instance, you are asked to sew if you're a fashion designer and they paid you in advance, you've not done the work. It means you are receiving that income in advance of the services to be rendered. Is what, and the prepaid what? Income is a current liability because your right for the ownership of that money has not come. Okay, so that is some of the items on the left hand. On the right hand, we can have our fixed assets. So we can have here, we can have costs, we can have depreciation, and net book value. Now the fixed assets are those items that belong to the company that can last long. They can last for more than 1 year. They are permanent in nature. In fact, in order of arrangement of the fixed asset, they are arranged in order of permanency. The ones that can last longer. So the fixed assets can be tangible or intangible. Now, tangible in the sense that you can see it, touch it, and feel it. Why intangible in the sense that you cannot touch it, but it's what in a company. For instance, goodwill is an intangible fixed asset. Okay, what is goodwill? The advantage that a company has over its competitors. Okay, so We have land and building as some of the fixed assets. Then if it has depreciation, you can deduct it to get net book value. Then we have plant and machinery, the cost. Then there's depreciation, then the net book value. Then we have furniture and fittings. We have cost minus depreciation, we get net book value. Okay, so we have premises. If there's cost, net book value. Then also we can have goodwill. Goodwill does not have depreciation. Okay, since it is not a tangible fixed asset, so you can just have its cost and net book value. Okay, so if you add up all this and add up all depreciation, then the value will give us a net book value. The net book value is the actual recent value of the asset after what depreciation has been deducted from the cost. So we can now have another heading as the current asset. Current assets are those items belongs to a company that can be used in one accounting period. Okay, they can't last than the fixed asset. So we can have stock. Now the current asset is arranged in order of least liquidity, the one that can easily be converted to cash. So we have stock, we have debtors. Now the debtors figure, if there is bad debt, you deduct bad debt less bad debt. Then less, if there's provision for bad debt, you also less provision. You less bad debt first before you less provision. So you have less provision for bad and doubtful debt. So if you do that, you bring down the original debtors figure. Okay, so we have another here which can be our cash in hand. So we have our cash at bank, or we can call it bank. Okay, so we also have what we call accrued income. Accrued income are those income in which you have rendered the service but you have not received money. Okay, so we have accrued income, and also we have prepaid expenses. Okay, so these are some of the current assets. So when you add up all this with this one here, you are going to have a value so that when you have all this also, I'm going to have a value that is supposed to balance. Okay, it's supposed to balance automatically. If it doesn't balance, it means in your solution, in your solving, there might have been an error. Okay, so that is how to prepare a balance sheet. Okay, so the land and building are the land of the firm, the plant and machinery, machines that are used in production, furniture, premises, then stock. The stock here is the closing stock, not opening. The closing stock while we were preparing our trading account. Okay, trading account. The debtors, those that bought from you, your customers, might either be owing you cash in hand, cash at bank. Okay, so this is the final account that comprise of trading account, profit or loss, and the balance sheet. Okay, now we are going to look at the typical question that comprise of trading profit or loss account and balance sheet. But I have to tell you, please watch the adjustments video. Watch that so that you can get an insight on the adjustment before we start solving. Okay, so watch that. Okay, now let's solve a question using what we've learned from the trading profit or loss account and balance sheet. Okay, So this question is from 2016/2017 section, the past question. Okay, as this is 101. Now let's see that is the past question I can lay my hands on. So the question said, use the information below to prepare an income statement and a balance sheet. Okay, now this is the trial balance of Beta on 31st December 2016. So we have the debit and the credit, machinery and provision for depreciation. 40,000 is machinery, provision for depreciation is 40,000, purchase and sales, the value, stock at 1st January, the value, bad debt and provision of bad debt, carried inward and returned outwards, debtors and creditors, discount allowed and the receipt, and cash and what capital. And the totals given is, as I said, the following adjustments are to be taken into consideration. A, closing stock 5,000, rate prepaid 3,000, rent owed 5,000, additional bad debt to be written off 6,000, provision for bad debt is to stand at 1% of debtors, and depreciate machinery at 10% per annum. So they're asking us to prepare the income statement. Okay, so the first thing I always advise students to do, and which you've seen in the adjustment in the previous video, is to prepare the adjustment first. Okay, so now let's do the adjustment. Remember, I said in the previous video that everything that is in the adjustment will appear 2 times while you're preparing your final accounts. Okay, so the owner of this is Beta. So the adjustment. So the first one is just closing stock. Closing stock is 5,000. Okay. Now B is rate prepaid. Now let's check if there's a rate they paid here. There is none. Okay, so we'll just write it there. And even there is rate paid here, what you would have done, since it is prepaid, you less. For prepaid, you less this amount from the amount that has been paid. Okay, so I have rate prepaid, which is how much? 3,000. C, rent owed. Is there anything like rent here? No. I think there's rent I was paid. Would have added this. Owed means accrued, which is add, addition. Okay, so rent owed, which is how much? 5,000. Okay, so D, we have additional bad debt to be written off 6,000. Now, in this situation, I make instance in the adjustment when bad debt appears under additional information also. What do? We check here if there is bad debt. Now there is bad debt here, which is 3,000. Okay, so the bad debt here, which is 3,000. They said additional bad debt to be written off 6,000. So we're going to have our bad debt. Bad debt amount is 3,000. Add additional. They say we should add additional bad debt to rating of 6,000. So I have 6,000, giving us 9,000 as our bad debt figure. Okay, so this 9,000 is what will go to profit or loss as the income statement, while the 6,000 will go to balance sheet. Okay, so that's for D. Now E, they say provision for bad debt is to stand at 1% of debtors. Provision for bad debt is to stand at 1% of debtors. So we are going to do the provision for bad debt. E, provision for bad debt. Okay, now they said 1% of debtor. Now look at the debtor's figure of 60,000. Now what do we do in this situation? Now look up. In the adjustment I said, if we have a bad debt in the adjustment, you have to deduct the bad debt figure from the debtor's figure first before conducting provision for depreciation. That is only when you have bad debt in the additional information. Or if the bad debt is not there, you go ahead and calculate the provision. Okay, so in this situation, before we calculate the provision, we are going to deduct the debtors figure. The debtors from the bad debt, the debtors is 60,000 minus the bad debt is what? 6,000. Because we want to calculate provision for bad and good debt and not the one that is already bad. This one is already bad. So 60,000 minus 6 will give us 54,000. Okay, so is this 54,000? That's the actual debtors figure now that will calculate this 1% on. So we have 1 over 100 times 54,000. So we have 540. Okay, now this 540 now is the new provision. This is new. The new provision, because we just recently calculated it. Now, when you've calculated this, you check in the question if there was previously provision of bad debt. Now we have the bad debt and provision of bad debt. Provision of bad debt here is 1,000. This is the old, and the new is 540. Now look up. If the old is 1,000 and the new is 540, it means it decreased. It came down. The old was 1,000. The new one we calculated is what? 540. It means it reduced. So what do? We find a difference. So it will be decreased. So this is 1,000 for the old provision. 1,000. So we'll find the difference. So 540 and 1,000. The difference will give us 460. Now this 460 is what we call decrease in provision of bad debt, because the old was 1,000 and the new calculated was what? 540. So we're going to get the difference. This difference that we post. So this 460 is what? A decrease, which will go to the credit side of the profit or loss account as income. Okay, so that's 460. Now the last part is depreciate machinery at 10%. So we said F, depreciation, %10 of the machinery. And what's the machinery here? 400,000. So we have 400,000 over 1. So which will give us 40,000 as our depreciation. Okay, so these are the adjustments. And let's prepare the income statement. So we'll have what we call the statement of comprehensive income. As at the same thing as trading profit or loss accounts. Okay, so the dates they gave to us: 31st December as at 31st December 2016. So have our first item here is always our opening what? Stock. Opening stock. Look at it here, that's 3,000. Now the next thing is add purchases. What are the purchases? 39,000. This will give us 42,000. Okay. Now check if there's carriage inwards. So look at it, carriage inward. Now we'll add carriage inwards, which is 2,000. That's 44,000. Check if there's return outward. There's return outward at credit. I'll do less return outward. All this was given in the format, okay? So it should be conversant with the format. That's 3,000. This will give us 41,000. Okay? So the other thing that will come here now is our closing stock. So the closing stock is 5,000. So I have less, and this is the cost of goods available for sale. So our less closing stock will be 5,000. So 41 minus 5,000 will give us 36,000. Now this is what we call cost of goods sold. Okay, so at the right hand side we'll have our sales. Now we'll check here if there is sales. Sales is 260,000. Now we'll check if there is return inwards. If there is return inwards, there is none. Okay, so we have our sales as 260,000. Now our sales minus cost of goods sold will give us our gross profit. Okay, so that these two will be the same as 260,000. So our gross profit, it means 260,000 minus 36. It will give us from our calculator as 224,000. Okay, so we have gross profit carried down 224,000. So the gross profit carried down, we bring it down here as gross profit brought down 224,000. And this is where the trading account stopped. The profit and loss continue from here. This was what I was trying to explain, that you can join it. Okay, so now we're going to post all the expenses in this part. Now the first one here, we'll check here the expenses. Now we have the rate prepaid. We'll have rate. It was in adjustment as 3,000. We'll have rent. In the adjustment as 5,000. Okay, so we have bad debt. Remember, we have 3,000 and it said add additional as 9,000. Bad debt is 9,000. Okay, we have depreciation. Depreciation of machinery as 40,000. Okay, I will check again. The discount allowed is here as an expenses. So discount allowed. Discount allowed is what? 3,000. While we also have discount received as 5,000. Okay, so we'll check if there are other things we've not recorded. Remember, provision for bad debt, it was a decrease, so it's an income. So I have decrease in provision for bad debt as 460. So we'll check meticulously if there are other things we have not recorded. So if there is none, so we have, if you add up this, 224,000 plus 5,000 plus 460, we have 229,460. No, these two is supposed to have the same balance. So it means we have net profit since the credit side is greater than the debit side. Okay, so I have 229,460. So the net profit is this minus all debts. So we have the net profit here as 175,460. Okay, that's our net profit, 175,460. So that is what we use to prepare the balance sheet. Statement balance sheet here. Now let's prepare the balance sheet, which is the statement of financial position. Okay. Now using all this item, now let's start with our left hand side. Now I have the first item, which is always our what? Capital. Now we'll check there. Where's our capital? Okay. Capital is 256,000. 256,000. So the next thing we do is to add net profit. And the net profit, the one we got from our trading profit loss account, now which is 175,460. So if you add up, you have 431,460. Okay. Now we're supposed to less drawings, but from this question there is no drawings. Okay. So we can move to our current liabilities. Now current liabilities, let's check our current liability. If there is creditor here, there is creditor as 25,000. Creditor is 25,000. Okay, now we'll check also. Now let's check in that. Now we check in the additional information. Okay, we have rent owed, which is a current liability. So we have rent owed as 5,000. Okay, so we'll move to the right hand side. The right hand side we have our fixed assets. We have cost, depreciation, and net book value. Now let's check if we have a fixed asset, machinery. Okay, machinery. The cost they gave us as 400,000. So we have 400,000. Now depreciation. Now watch. We calculated depreciation of 40,000 for the current year, but there was provision for depreciation in the previous year, which is 40. Okay, so depreciation will be our accumulated, the current one plus the previous, which is the provision for depreciation. Okay, we treated that in the addition, in the adjustment, the video you watched. So this 40,000 plus the one we calculated recently will give us 80,000. So 400,000 minus 80,000 will give us 320,000 as our net book value. Okay, so in this will close. So our net book value. So I think that's the only fixed asset. Now we're going to check our current assets. Current assets. And first I'll have stock. Closing stock is our current asset. Stock as what? 5,000. Okay. While the next one we have prepaid rates. Prepaid rate is essentially as prepaid expenses, expenses paid in advance, which is current also 3,000. Okay. We're going to start from up here so that we don't miss any item. That is the one you have to do at each point. We've recorded machinery, purchase and sales, trading account, stock, trading account, bad debt and provision of bad debt. Now this provision of bad debt now, we have to take cognizance of our debtors. Let's record debtors. Our debtors is 60,000. Remember, our debtors is 60,000. But we're going to less our bad debts. Okay? So I have less bad debt. Okay? Now remember, the additional bad debts, that is what we're going to less. Additional bad debt is to be what? Rating of 6,000. Okay? So it is this 6,000 we deduct to give us 54,000 before we less our provision. That's a less provision for bad debt. Okay? Now look at the provision. The provision is the recent one we calculated. Please not the difference. You only record the difference in the trading and the profit or loss account. But the recent one you calculated is what will go to the balance sheet. So let's roll it for issue of bad debt, which is what? 540. So 50,000 minus 540 will give us 53,460. Okay, so we'll check again if there are other items that is supposed to come to the balance sheet. Cash. We're going to recorded cash. Cash is 80,000. Okay, we'll check if the other item that is supposed to come. We'll check here again. Okay, I think that is all. Okay, I think that's all. So add this 5,000 plus 3, 8,000 plus 8 plus 8, 88 plus 53,460 will give us 141,460. Okay, 141,460 plus 320,000 will give us 461,460. Okay, so if we add up this also, 43,460 plus 5 plus 5 will give us 461,460. So it balanced up. automatically. Okay, so that is the balance of the balance sheet. Okay, so that is how to prepare our statement of comprehensive income and the balance sheet, which is the same thing as trading profit and loss account and balance sheet. Okay, now let's move to the next video. Hello, welcome to my channel today. This is King's Tutor. It's the first time of joining us. Ensure you like, comment, share, and subscribe to this channel. Okay. Want to see a question on the bank reconciliation statement. Okay. Ensure that you go through our previous video. We have done series videos on bank reconciliation statement. Very interesting. We started from scratch. We've done that. I'll drop it up here, or I'll drop it in my description. Ensure you watch from the introduction where I talked about the unpresented, uncredited check, the credit transfer. I explained each and every one of them in details. I explained the bank reconciliation statement. I explained the bank statement. I explained the cash book. I explained the reasons for the discrepancy between the bank reconciliation and the bank statement and the cash book. Okay, that necessitates a reconciliation. I did that. Ensure you watch those videos. Okay, it will help you. Now let's see how to solve this question, though complicated, but it is very simple. Now the question said the following were from the bank columns of the cash book of Mr. Lawansi. We have on the debit side, January 4th, study 1,018 naira, Adigun 1,960, Balo Tito 1,190. Balance carried down is 4,780, which gives a total of 9,010 naira. We have in 2005, supposed to be 2016. We have January 1, balance brought forward 6,016 naira. January 8, Okechukwu 6,014 naira. January 17, Bisola 1,540, and January 29, Fisayo 770. It also totaled 9,010 naira. Now the details of the bank statement are as follows. Now we have for the bank statement, we have the debit. We have OKK 640, EMC 1,540, standing order 570, and bank charges 300. We also have credit 1,080, that's from Tade, and 1,960, that's check, and credit transfer of 2050. And we also have the balance that's given down there. Now they say you are required to draw up an up-to-date cash book and prepare a bank reconciliation statement as at 31st January 2016. Now, when it comes to, we've done a question like this, when it comes to a situation that relates to overdraft, because if you check that question, you'll see OD at the bank statement axis. Now, I've thought in the previous video how to identify that a question is an overdraft question. It is overdraft when you check in the cash book that it has a credit balance brought forward. Okay, normally balance brought forward for a cash is an asset, and all assets have debit balance. So it's supposed to have what? A debit balance. That is the right thing. Okay, but when it is credit, it means it's what? An overdraft. It is what? It was overdrawn, and it was indicated there as OD. So when it's overdraft, it has a different settings altogether. I did that in the previous video. That's why I encourage you to watch that. Okay, now if we are to check in the when we are given a bank column and a bank statement, how do we treat this? How do we solve this? It is very simple. Now the first thing you have to do, or we have to do, is to go to the cash book, identify those items on the debit of the cash book and those items on the credit of the cash book or the bank statement. Identify items on the debit of the cash book that is on the credit of the bank statement. You tick it. Once you tick it, any item on the debit of the cash book that is not on the credit of the bank statement, that item is an uncredited check. Any item on the debit of the cash book that is not on the credit of the bank statement is an uncredited check. And I explain what uncredited check means. Okay, now these are money that have been received in the cash book but has not been credited by the bank. Okay, so let's go. Let me explain further. And also, if you go to the cash book, same, you check at the credit side, tend to tick every item on the credit side that also appears on the debit side of the bank statement. Every item on the credit side that also appears on the debit side of the bank statement, you tick it. But if there's any item on the credit of the cash book that is not on the debit of the bank statement, that item is unpresented check. unprecedented check, meaning they have paid that check out, but it has not been debited from the bank. Okay, and also once you're done with that, you also go to the bank statement, check items at the credit of the bank statement. Now you're starting from the bank statement, items at the credit of the bank statement that is not on the debit of the cash book. Such items can be the credit transfer, dividend. These are items that's supposed to add up to the cash book. Okay, and also you check the debit of the bank statement. You check item on the debit of bank statements now that is not in the credit of the cash book. Those items should be items of standing order, bank charges, dishonor check, item that is supposed to be what? Deducted from the cash book. Okay, so these are the items. Now let's solve this question using what I've said. I'll just give a recap. Now, if we check in that question, we can say, let's start from the debit of the cash book. Okay, now we have 301080. Let's check at the credit of the bank statement. Okay, there's 1080 there. It's supposed to be 30, but they wrote check. That's an error. So that is correct. So we tick it. Adigun 1960. We have 1960 there. We tick it. Now Baloti to 1190. There's no 1190 at the credit of the bank statement. It means Baloti to is an uncredited check. So let's take note, uncredited check, Balo Tito 1190. Okay, now let's go to, apart from the balance carry down, you don't include balance carry down, let's go to the credit of the cash book now. Okay, triple 640, we have 640, okay. The next one, Bisola 1540, we have 1540, that's okay. Then Fisayo 770, there's no 770 at the debit of the bank statement. It means that's item that 770 is an unpresented check. Okay, now let's go to the bank statements. Let's check items at the credit that is not in the debit side of the cash book. Now we have seen 1080, we have seen 1960. Now 2050 on the credit of the bank statement is not in the cash book. It means the credit transfer. You can see their credit transfer from a day. Okay, the next one also, let's go to the debit of the bank statement. Debit of the bank statement, we have 640, it is there in the cash book. 1540, it is there in the cash book. Now 570, it is not in the cash book. That's standing order. Bank charges 300 is not in the cash book. Okay, so we have broken this down. Now they said require draw up an up-to-date cash book. Okay, so we are going to draw up an up-to-date cash book. Okay, so if we do that, now what's the name of the owner? Mr. Lawansi. So this is an adjusted cash book. Adjusted cash book. So what you do, the balance carried down in that cash book in the question becomes our balance brought forward and brought down as 4,780. Okay, so now we're going to record items. Now we have our credit transfer. Record it here. Credit transfer is 2050. 2050. Okay. The next one will record the standing order. It will come here. Remember, this is an adjusted cash book. The unpresented and uncredited check do not come here. So we have our standing order of 570. We have a bank charges of 300. Okay, so that's the only thing there. So let's get our value, which can be our balance carry down. Okay, so if we use my calculator, so at the credit side we have 4780 plus 570 plus 300. It gives 5650. 5650. Now it's greater than this, minus 2050. We have 3,600. So 5650. Okay, that's 3,600. So that is the adjusted cash book balance. Cash book. So let's now prepare the bank reconciliation. So let's the bank reconciliation statement as at, what's the date? 31st January 2016. So we're starting with the cash book balance. So it is now overdraft as per adjusted cash book. Now the reason why it's overdraft, it gives a different rule. We have shown in the video, in previous video. Please watch that. Please ensure you watch that. Go to, I have a playlist for bank reconciliation statement. Just watch that so that you understand the reason why we have overdraft. I explained it there, okay? And also the formula, the format will change. So overdraft as per cash book. So I have, this is the amount here, 3,600. 3,600. So when I say add, now normally if you're starting with cash book, you're supposed to add unpresented check, okay? But now that it's overdraft, what you add is uncredited, okay? So it said add uncredited check, okay? Now the uncredited check, you check the question we detected. We said is the one that was at the debit of the cash book, that was not at the credit of the bank statement, and it was balotito. So uncredited check here is balotito. How much is it? 1,190. So if we add it, we have 0, we have 9, we have 7, we have 4,790. So we now have less unpresented check. Now, unpresented check, we said, is the one at the credit of the cash book that is not at the debit of the bank statement, and it was Fisayo. Fisayo is 770. So I'm letting it. So 4790 minus 770 will give us 4020. So this 4020 now we'll call it balance as per bank statement. Okay, that's 4020. Now the reason why bank reconciliation statement is awesome is that while you're solving it, even in the examination hall or whenever you're solving a question, you will know right there if what you did was correct. Now we have 4020 here. Now check in the question that was given in the bank statement, the last balance there, what are you seeing? 4020. Okay, so it means what we did was correct. Okay, so that is how to solve. So please ensure you go through the playlist. You'll see the video start from scratch. You understand it bit by bit. Okay, and ensure you like, comment, and subscribe to the channel. Thank you very much. Okay, follow us on all our platforms. We're on TikTok, we're on Instagram, we're on Facebook, on YouTube. Ensure you follow us there. Thank you very much. My channel today. This is King's Tutor. This is the first time I'm joining us. Ensure you like, please comment and subscribe to our channel. Thank you for clicking to this. And if you're a returning subscriber, thank you very much for your support thus far. Okay. Now, we want to see a question on departmental accounts. Though we have seen various videos on that. Ensure you check up here to see that, or you check in my description. Okay, you will see introduction video on departmental account and various videos on that. So let's see the question. It says the following balances were extracted from the books of Adebola Enterprises for the year ended 31st December 2019. We have sales for Department A, 104,000, Department B, 136,000, Department C, 60,000, all sum up to be 300,000. We have purchases, Department A, 60,000, Department B, 90,000, Department C, 50, all sum up to be 200,000. We have insurance, 1,600. We have commission paid, 7,000. We have rent and rates, 4,920. We have delivery expenses, 1,400. We have administrative expenses, 9,120. We have discount received, 1,540. We have salaries, 36,600. We have advertising, 2,420. We have depreciation, 4,200. Now we have opening stock for departments A, B, and C, 14,000, 24,000, and 6,000. All sum up to be 44,000. We have closing stock, departments A, B, and C, all sum up to be 61,000. Now additional information. Expenses are to be apportioned on the following basis. A. Advertising, commission, and delivery expenses to sales. Y. Salaries, depreciation, rent and rates, administration expenses equally. Then discount received is to purchases. Then D. Insurance ratio, 5:3:2 to A, B, and C respectively. Now, the question, you are required to prepare departmental trading profit or loss account for the year ended 31st December 2019. Okay, so let's solve the question. Now we are going to start with the additional information. If you are used to this channel, I said most time, if you're solving a question that have adjustments or additional information, you should start from there. Okay, now let's see the adjustment. Now we have done it before. I said it. We have seen how to solve adjustments. Okay, I'll just drop it in the description below or check the previous video on departmental account. Okay, so now the name of the owner is Adebola Enterprises. Okay, so the first one said we should apportion expenses. The first one is advertising. We should do that to sales. And let's first of all get the ratio of sales. Okay, now sales for department A is 104,000 from the question. Department B is 136,000, while department C is 60,000. Everything sum up to the 300,000. So we're going to use this as the ratio, since they said for that certain expenses we should use the sales. Okay, so the first one is advertising. In additional information there, advertising. So advertising now will now be for department A. Advertising. Now we'll get this now 104,000 divided by the total of all this, which is this 300,000, times the value for advertising, the actual expenses for advertising, which is from the question 2,420 over 1. Okay, so if we do this using our calculator, it will give us 839 approximately to the whole number. Okay, so that's the first one for department A. Now another, we have department B. Okay, so department B will be 136,000 divided by the whole total, which is 300,000, times 2420 over 1. Okay, so if we do that, it will give us 1097. And department C will have 60,000 divided by 300,000 times 2420 over 1. So if we do this also, we have 484. Okay, so that's the first one. Now the next one is the commission. So we have commission. Okay, so for the commission now, we'll have department A will now be the same 104,000 divided by 300,000 times, the amount for commission from our question is 7,000 over 1. So this divided by this times 7,000 will give us 2427. Okay, the next one is department B. And department B is 136,000 divided by 300,000 times 7,000 over 1. So this will give us 3173. Okay, so the next one is department C. Now we have department C as 60,000 divided by 300,000 times 7,000 over 1. So if we do that, it will give us 1,400. That's for commission. Okay. Now the next one is delivery expenses. So we have here delivery expenses. Delivery expenses for department A, it is 104,000 divided by 300,000 times the amount for delivery expenses is 1,400. So over 1 we have 485. Okay. The next one for department B, we'll have 136,000 divided by 300,000 times 1,400 over 1. So we'll have 635. And department C will have 60,000 divided by 300,000 times 1,400 over 1. So we'll have 280. Okay, so that is for the first one, the first adjustment. Now the next one, which is B, they said salaries, depreciation, rent and rates, and administration expenses is to be apportioned equal. Okay, so since they said equally and we have 3 departments, so it means it is what 1/3 for each. Okay, so the first one there, so let's get the ratio for equally. The next one is B, it said equally. Okay, equally. So since we have 3 departments, it will be 1/3 for them. Okay, so in this now, we now have for the first expenses there is salaries. Okay, so we have salaries for department A. Department A, it is 1/3 times the amount for salary. The amount of salary is 36,600. Okay, from the question there, the amount of salary is 36,600. So if we do that, it will give us 12,200. So that is for department A. Then department B is the same, 1/3 because I said equal. 6,600 divided by this will give us 12,200. And the next one, department C, same 1/3 times 36,600. It will give us 12,200. That's for the 3 departments. Okay. The next one, we go to depreciation. So for depreciation now, we'll have Department A. Department A, it's same equally 1/3 times the amount for depreciation is 4,200. Okay, so 1/3 times 4,200 will give us 1,400. Okay, so the next is department B, the same 1/3 times 4,200 over 1 will give us 1,400. And the same department C as 1/3 times 4,200 will give us 1,400. Okay, so that's for depreciation. The next one is rent and rates. Rent and rates. Okay, so rent and rates is also equally. So we have department A as 1/3 times. Now, what is the amount for rent and rate? It is 4,920. 4,920. So 1/3 times this will give us 1,640. Okay. For department B, it's still the same. 1/3 times 4,920 will give us 1,640. And for department C, is same as 1/3 times 4,920 as 1,640. That is for rent and rates. While the next one is administration expenses. So we have admin expenses. Admin expenses. And the admin expenses for department A, same equally as 1 over 3 times. What's the amount for the expenses of admin? 9,120. 9,120. So that will give us 3,040. For department B, it's same as 1 over 3 times 9,120 as 3,040, and same department C as 1 over 3 times 9,120 as 3,040. Okay, so that is the equally. Okay, that is doing it equally. That's the B. Now that of the C from the question, it is discount received to purchases. Discount received to purchases. Okay, discount received to purchases. So we're going to do it here. Just you can write down this part so that you can use this part to solve the question. So you can write down this part. Can pause the video and write down this part, and let's do that of the C and D here. Okay. Okay. Now let's do the C. It says the C, a discount received. A discount received. The ratio should be of purchases. Okay. So we have department A. Department A. Now, if you check the purchases there, department A is 60,000 divided by the total of the 3 departments for the purchases is 200,000 times what is the amount for discount received? The amount for discount received from the question is 1,540. 1,540. 1,540. Okay, so if we do that, 60,000 divided by 200,000 times 1,540, it will give us 462. As for department A, the next one is department B. Department B, for the purchases, if you check there, also you'll see department B is 90,000 divided by the total, which is 200,000 times 1,540. Okay, for the amount for discount received. So 90,000 divided by 200,000 times 1,540, we have 693. That's department B. Then department C, from the purchases, is 50,000 divided by 200,000 times 1,540 over 1. So we have 50,000 divided by 200,000 times 1,540. We have 385. So that's discount received. That's the third one. Now the last one for the apportionment, which is D, they gave us, they said insurance ratio should be 5:3:2 to A, B, and C. So let's get the ratio first. They say 5:3:2 for A, B, and C. So if you add it up, 5 plus 3 plus 2 will give us 10. So the total is 10. So for department A, it should be 5 over 10. Department B is 3 over 10. Department C is 2 over 10. Okay? So if we do that for the insurance, we'll have for department A now, it is 5 over the total is 10 times what is the amount for insurance? 1,600 over 1. So 5 divided by 10 times 1,600, it is what? 800. And the next one, department B, is 3 over 10 times 1,600. So we'll have 3 over 10 times 1,600 is 480. And for department C, it is 2 over 10 times 1,600. So we have 2 over 10 times 1,600. We have 320. Okay, so that is the apportionment for the expenses that was given and the income. Okay, so now let's prepare the question they asked us, departmental trading profit or loss account. Now we have done that, we have seen the format. Ensure you check in the other video to see the format. Now let's prepare this. Now we have departmental trading profit or loss account for the year ended 31st December 2019. Okay, so if we do this and we draw the middle, and we have three departments. Okay, departments A, B, and C. Okay, A, B, and C. Okay, so we have department A, we have department B, we have department C, we have department A, we have department B, we have department C. Okay, so now we're going to start. Now the first thing we should do is the opening stock. Okay, so we're going to check there. Now if you check the opening stock for department A, it is 14,000. For department B, it is 24,000. And department C, it is 6,000. Okay, that's opening stock. The next thing is to add purchases. So add purchases. Okay, so for department A, the purchases is 60,000. Department B, it is 90,000. And department C, it is what? 50,000. So when we add it up, now this one will give us 74,000. This one will give us 114,000. And this will give us 110,000. Okay. The next one, we'll check if there's carriage inwards there in the question. Is there any carriage inward? No. Now check if there is return outwards. Is there any? No. Now let's have closing stock. Now let's closing stock. Now the closing stock there for department A, it is 21,000. Department B, it is 30,000. And department C, it is 10,000. So if we do that, now deducting this, now we have 53,000. Now we have 84,000. We have 100,000. Okay, we have 100,000. So this is the cost of goods sold. The cost of goods sold. Now let's have our sales at the right hand side. Now the sales, the value for sales for department A is 104,000. 104,000. For department B, it is 136,000. For department C, it is 60,000. Okay, is there return inwards? No. So we are going to get our gross profit. So the sales minus the cost of goods sold will give us a gross profit carry down. Okay, so using our calculator, now the sales is 104,000 for department A. 104,000 minus 53,000 will give us 51,000. Okay, the next one, 136,000 minus 84,000 will give us 52,000. Why? The next one is department C have a sales of 60,000 and we have our cost of goods sold. Sorry, this is supposed to be 56,000, not 110,000. It is 6,000 plus 50,000 as 56. Okay, so also 56. So as 56,000. I thought it is 60,000. It is 6,000 plus 50, that's 56. So 56,000 minus 10 is 46,000. Okay, so we are in line now. So 46,000, 60,000 minus 46,000 will give us 14,000. That's our gross profit. So that when we add them together, this will give us 104,000 to give us 136,000, and this will give us 60,000. The same as this. This is 104,000, 4,000. Next one is 136,000. Next one is 60,000. Okay, so that is that. So this gross profit carried down. It is now brought down here as gross profit brought down. So department A is 51,000, department B is 52,000, and department C is 14,000. Okay, now here we have to list now our expenses we have done. So we have apportioned them to each department. You see the reason for apportionment? So while you are putting to each department, you also what post them. So we are going to go to our question so that we will not miss any item. So we'll start from the top, the value that is expenses that we are going to put here. The first item there is sales. We have recorded, that's not an expense. Purchases we have recorded, and the next one is insurance. Okay, so insurance, we have done the apportionment here. Look at it, insurance, department A. So right here, insurance for department A, it is 800. For department B, it is 480. And department C, it is 320. Okay, the next one from the question there is commission paid. Commission, the paid. Okay, so we did commission. We apportioned, we did commission. It was the one that was here before we cleaned it. So the commission paid for department A, it is 2427. 2427. Department B, it is 3173. And department C, it is 1,400. Okay, that's for the commission. The next one is rent and rates. Rent and rates. Rent and rates. Look at rent and rate here. Department A, 1,640. Department B, 1,640 and 1,640. It is equal. Okay. The next one, delivery expenses. We have delivery expenses here. So we have delivery expenses. For department A, it is 485. 485. Department B, it is 635. And department C, it is 280. So that's delivery expenses. Okay. The next one is administrative expenses. Okay. The next one is administrative expenses. We have done it here. Look at it here. So we have admin expenses. A is 3040. B is same as 3040 and C 3040. The next one is discount receive. Discount receive is an income, so it will come here. Discount receive. Okay. Okay, we have done for department A, look at it here, 462. Department B, 693. And department C, 385. Okay, so that is for discount receive. The next one is salaries. The next one is salaries. We have done it here equally. So we have salaries. Department A, 12,200. B, 12,200. C, 12,200. Okay, that's for salaries. The next one is advertising. Advertising, it was there, we also cleaned it. So you can see it on your screen there. So advertising, department A will be 839, department B 1097, department C 484. Okay, so that is for advertising. The next one is depreciation. Depreciation, look at it here equally. So we have depreciation. Depreciation. Department A is 1,400. Department B 1,400. Department C 1,400. That's for depreciation. Okay. So the next one is opening stock we have recorded, closing stock we have recorded. Now let's go to the additional information to check if there's anything there that we did that we've not recorded. Advertising, we've recorded. Commission, we've recorded. Delivery expenses, we've recorded. Salaries, recorded. Depreciation, rent and rates, admin expenses, discount receive, and insurance. Okay, so that is how you check it. Because if you don't check it like that, you may miss some item. So let's now add up all this to get the net profit or net loss. So okay, let's start from this part. Let's start from here. So department A, here it is 51,000 plus 462. It will give us 51,462. Okay. Now department B, 42,000 plus 693 is 42,693. Okay. And department C, 14,000 plus 385 is 14,385. Okay, so let's come to the expenses side for department A. We have 800 plus 2427 plus 1640 plus 485 plus 3040 plus 12,200 plus 839 and plus 14. It gives me 22,831. So it means here it's greater than this. So if we deduct it from 51,462, we'll have a net profit of 28,631. So that when you add together, you have 51,462. Okay, so that's 51,462. The next one is department B. We'll have 480 plus 3173 plus 1640 plus 635 plus 3040 plus 12,200 plus 1097 plus 14. We have 23,665. So if you deduct minus 52,693 from it, we'll have 29,028, such that we now have 52,693. Okay, while this department C, we have 320 plus 1,400 plus 1640 plus 280 plus 3040 plus 12,200 plus 484 plus 1,400 will have 20,764. 20,764. Okay, so it means there is a loss for department C. So we'll have a net loss here. There's a loss for department C because the expenses is more than the income. So if we have here the total year as 20,764, we deduct it from we deduct 14,385 minus 14,385. So we have 6,379. Okay, so this will be 20,764. Okay. So that is that on that. Okay, so that's how to solve question relating to departmental account. Okay, please ensure you like, comment, share this video, and please, we're on Facebook, we're on TikTok, we're on Instagram, the same name, the King's Tutor. Ensure you follow us on those channels. Okay, for more of this. Thank you very much. Ensure you like, please like the video, comment on it, and subscribe. Thank you very much. Hello, welcome to my channel today. This is the King's Tutor. It's the first time of joining us. Thank you for joining us. Ensure you like, comment, share, and subscribe to this channel. Okay, now today we want to continue with a series on accounting. Now I want to see this question, a very complicated question to some persons, but it's quite simple. Okay, now let's see what it means. The question said, if the rate of turnover of stock is represented by the letter K, and the formula for finding this rate is given as this, that is K equals X divided by Y plus Z divided by 2. What does letter X, Y, and Z stand for? That's the first question. The second one, the opening stock of a trader is given as 14,750 naira. His purchases less returns for the year amounts to 72,100 naira, and his closing stock is valued at 10,650 naira. Now find the rate of turnover of the stock. That's the second question. And the third one said, if the gross profit on turnover of the trader above is 20%, calculate the turnover of the trader for the year. Simple question, very simple, but quite complicating, sort of. Okay, so to solve this question, the question is kind of complicating, but it's very simple. Now it needs the knowledge of the stock turnover, markup, and margin. Okay, now we have done that before. If you have not seen the video, ensure you check up here, you will see the video. Okay, and if you're watching in probably the TikTok or in my Instagram, ensure you go to my YouTube to see videos on markup and margin. Now let's continue. And the question said, if the rate of turnover of stock is represented by the letter K, and the formula for finding this rate is this. Now they said, one thing you should note, they said the rate of turnover of stock is given as this. Now what does the letter X, Y, and Z stand for? Now the first thing you should know is, what is the formula for rate of stock turnover? Okay, now the rate of stock turnover, the formula for rate of stock turnover is given as cost of goods sold over average stock. Now this average stock is given as opening stock plus closing stock or inventory divided by 2. So once you know this is the rate of stock turnover formula, it is easier to identify. Now they ask us, what does X, Y, and Z stand for? Now they already told us that K stands for rate of stock turnover. Now X, what does X stand for? Now X is a denominator. It means our X is cost of goods sold. Okay, so it means X is cost of goods sold. That is X. Now they said Y and Z. What does Y and Z stand for? If you check here, you see Y plus Z, and then add divided by 2. So it means Y is opening stock, while Z is closing stock. Y is opening stock, while Z is what? Closing stock. Okay, so that is the first question. We have answered that. And the second one said, the opening stock of a trader is given as 14,750 naira. His purchases less return for the year amounts to 12,000 72,100 naira, and its closing stock is valued at this. Find the rate of turnover of the stock. Now they want us to now calculate it in financial terms, the rate of stock turnover. Okay. Now, if you notice in the question here, you will notice that the rate of stock turnover have cost of goods sold and average stock. And in this second question, it said the opening stock is this, and the purchases is this 72,100 naira, and the closing stock is this. They did not give us cost of goods sold. It means we have to what? Find the cost of goods sold. Okay, now we have to find it. We are conversant with the final account, the cost of goods sold, the cost of goods sold will be given as opening stock plus purchases minus closing stock. That's cost of goods sold. Opening stock plus purchases minus cost of goods sold. Now, what's the opening stock? They said the opening stock is given as 14,750. As 14,750 plus. Now, they say the purchases less return is 72,100 naira. So we have 72,100 naira minus, what's the closing stock? Closing stock is 10,650. 10,650. That's the closing stock. So if we do that, we have 14,750 plus 72,100 naira. 14,750 plus 72,100 naira minus 10,650. So we have 76,200. 76,200. Now this 76,200 is now the cost of goods sold. Now, but they're asking us to find the rate of stock turnover. So it will not be using the same formula. Okay. So our rate of stock turnover is equal to cost of goods. So what's cost of goods? So we have looked for it as 76,200 divided by average stock. Average stock is opening plus closing divided by 2. So we'll come here. What is opening stock? The opening stock is 14,750. 14,750 plus the closing stock is 10,650. 10,650 all divided by 2. Okay, so we have 76,200 divided by, now let's add this to 14,750 plus 10,650 divided by 2 will give us 12,700. So 76,200 divided by 12,700 will give us 6 times. Okay, so the rate of stock turnover is the number of times the trader sells his stock to get more stock from the market. Okay, so it is normally in what times or days. Okay, so the question said find the rate of stock turnover. So it is what 6 times. Okay, now the next one is C. They said if the gross profit on turnover on the trader above is 20%, calculate the turnover of the trader for the year. Look at the question. If the gross profit on turnover, now they're talking about gross profit percentage. And we have done that. That's why I said watch the markup and the margin video. They said if the gross profit on turnover of the trader above is 20%, calculate the turnover of the trader for the year. Now turnover is the same thing as sales. Okay, now they are telling us that if the gross profit on turnover of the trader is 20%, what is the turnover? Okay, now to solve this, like I said, you need a knowledge of markup and margin. Now, if you watch here, they say the gross profit on turnover is 20%. That's gross profit percentage, okay, which is margin. And margin is the relationship between the gross profit and sales. Now, they said, what is the turnover? Now, we cannot solve this question with margin because we are not giving turnover, which is sales. But we already have our cost of goods sold. So we can convert that margin to markup. Now remember, we said markup is a relationship between the profit and the what cost price. We have done that. Check the video. Okay, relationship between the profit and what the cost price. Now since we already have cost here, it will be easier. Okay, so it means we have to convert this. So they said the gross profit on turnover is 20%. Okay, it's 20%. So it is gross profit on sales, but we don't have sales. Let's convert this 20%. That's 20 over 100 is 1 over 5. Now we did converting margin to markup. We said when you are converting margin to markup, you deduct the numerator. Okay, so we will now have 1 over 5 minus 1, which is 1 over 4. So this 1 over 4 now is now markup, relationship between profit and the cost price. Okay, so we'll use that to get the question, which is what? The turnover. Now from this now, since this is a markup, now we are going to solve. The markup is a relationship. The markup is the profit over the cost price, okay, or the cost. So since we already have the markup as 1 over 4, and it's 1 over 4 equal to, now the profit is not yet known. The profit is not yet known. That is what we used to get the sales. Now the cost price, this is the cost price, is the cost of goods sold, which is 76,200. 76,200. Now if we do this now, if we do this, we cross multiply, 4 times P will give us 4P equals this times 1 is 76,200. And to get P, which is the profit, we divide both sides by 4. So this cancels this. My P is a profit. So 76,200 divided by 4 will give us 19050. So my profit is 19050. Okay. So now in this now, the question they ask us is what is the turnover of the trader? The turnover means sales. Okay. Now we know that our sales is the cost plus profit. Sales is cost plus what? Profit. So our cost, we have already looked for it before, which is 76,200 plus the profit is the one we did here. That is 19050. So our sales will be same thing as turnover will now be 76,200 plus 19050. And that will give us 95,250. So 95,250 is the actual turnover. Okay, so that's the actual turnover. Okay, so that is our question, and that is the solution. So if you have any question, ensure you leave it in the comment section below. And now, one of the ways I want to ensure that I interact with my viewers is to ensure that I ask questions, I give assignments at the end of each video. Okay, now we have started it. Now, ensure you answer this. Leave it in the comment section below. Leave it in the comment section below. Leave it in the comment section below. Now, the question is, that's an assignment. Okay, he said, which of the following concepts recognize the principle of double entry? Which of the following concepts recognize the principle of double entry? A, accrued concept. B, business entity. C, dual aspect. D, going concern. And E, realization. They say which of the following concepts recognize the principle of double entry? A, accrued. B, business entity. C, dual aspect. D, going concern. And E, realization. Once, just answer the question either A, B, C, D, or A. Just drop it in the comment section, the option and the word that is attached to it. Then I'll reply you in the comment section. Ensure you answer that. Please ensure you like, comment, share, and subscribe to this channel. Now I want to recommend a video for you. That's the markup and the margin full video. Look at it here, this video. Ensure you watch it now. Okay, let's go watch it. Thank you very much.